So BNI, about a month ago, you had mentioned about rates where they are
Business Networking International.
Business Networking International.
I remember it.
Remember it?
Mm-hmm.
Yeah. So you're one of the guys that's always spotlighted there because you're the funniest in the room. But tell us really, in your own words, and the best way you can explain in layman's terms, why the rates are decently, good now. Mm-hmm. We're probably going to never see the twos again, and it was a one-off. And historically, it's actually not as bad.
Yeah, I think everything's relative, right? You got to put everything in perspective. You got to take everything with a grain of salt, everything we've ever been told. And that is true with interest rates. So right now, you're around 6, low 6s. Now, a few weeks ago, we were in the 5s, right? Mm-hmm. So, oh my gosh, now we're in the 6s. That's awful. Well, that might be a difference of $100 a month in your payment. Why are we in the 6s? Well, because rates are sensitive to the bond market. The bond market's sensitive to what's going on geopolitically and internationally. And we happen to have some stuff going on there right now. And when that changes, rates will probably come back down again. But to your point, we had a point in time where during COVID, rates were in the 2s. I would be the first person, or probably actually not the only person, to say that that is not good. That wasn't good. Yes, my mortgage rate's 2.75. Do I appreciate that? Yes, every month when I make the payment. But as a real estate professional and understanding the bigger picture, is it a good thing? No, it's not. Because what that means is it's set an artificially low floor for rates, right? Which leads to expectations. And what it's done for those of us who have that low rate right now and have the ability to maybe step up, change our lifestyle, move, buy a different house. At the end of the day, we're going, I don't want to triple my rate. I'm going to stay where I am. Yeah. Now, the problem is first-time home buyers, everybody entering the market that wants to buy a home like ours, they can't because we're going, nah. Normally, yeah, we would have moved on and you would have gotten a shot at my house. But we're saying, no, we're not. And meanwhile, seniors and boomers are living longer. They're not going into homes like they used to, which is a good thing. They're healthier. But that also means more homes that aren't available. So what we're doing is we're making it very difficult for first-time home buyers, which now are the average age is in the 40s, which is insane. I bought my first house at 26. We're just making it more difficult, and it's all driven by how exciting rates are 2%. The long-term effect of that is a negative one. But if you look back over the past 25 years and take an average over time, the average is 8.5%. So what does that mean?
Comparatively, we're still lower.
Right. So, it's a little bit of looking at it both ways, right? No one wants to triple their mortgage rate, but also those who are saying, I'm waiting for rates to drop, that may not be realistic either.
Do you think 9/11, remember when the Greenspan lowered the interest rates and everybody was refinancing their house in 03, 04, 05, end of 06, and then everything crashed in 07. Do you think that also artificially changed the numbers? Because remember in the 90s, I remember when I opened up my gym, the interest rates were 15%. Mm-hmm. So when we went from 15 to like 5 and 6 on even jumbo loans, do you think that also artificially changed the outlook on perception and what the interest rates are?
Yeah, sure. Anything that changes the going market rate or the average or expectations, again, is going to make it more difficult for people to swallow anything that's higher than that. And so they're not realistically going to look at the big picture. You have to say, well, what's your alternative? Well, I guess I could rent longer until it's time. Okay, well, that's 100% mortgage rate because you're giving every penny to your landlord and you've got nothing to show for it. The other thing is I always encourage people, look at everything is in a capitalistic market, everything is a balance. So if mortgage rates are up, so is your savings account. There is no scenario where you win on both.
Right.
So you also have to say, well, what am I waiting for? I'm waiting for rates to drop. Great. And now my savings that was at 4% is at 1%. So are you really doing better? So I think the other thing is to think about a house is like, it's a commodity. I always joke, Have you ever seen a house? Have you ever lived in a house? Have you owned a house? Would you like to own a house? It's like milk, eggs, like you can't escape it. It's not a luxury good.
No.
So out of necessity, that's why the market doesn't stop no matter what the rates are.
Yeah.
It becomes more of a sensitivity, I think, for those who are saying, well, what about as an investment, or what about it because it'd be nice to have a bigger house or whatnot. Those are the people that are sitting on the sidelines, and I think probably need to start to look at it more like I do. I'm still buying properties. I don't think we're going to see much lower than 5 anytime soon.
Overall.
It's still good overall, and it's a difference of 1% right now. And you joke, realtors always say, date the rate, marry the house, right? So even if you did get a good deal on the house today and you're like, oh man, I paid 6.5%. When rates hit 5.5%, just refinance, lower the rate. Guess what's going to happen by the time that rate goes down? The value of your house is going to go up 10, 15%. So if you wait, you're going to be paying that much more for the house anyway. If you don't wait, you're going to have all that equity to leverage.
Yeah. One of the things that I'm running into with that 2.9% mortgage is, when I go to my accountant, he's like, hey, guess what the good news is?
Mm-hmm.
Your mortgage rate is 2.9%. Guess what the bad news is? I got hardly any interest I can write off.
Mm-hmm.
So I understand what you mean by there. It's a double-edged sword.
Can't win both. Yeah.
Yeah. And in our business, same thing. Home prices are going up. We talk all the time about, renovation costs and what Igor goes through between your labor or your materials, and people don't expect the insurance prices to go up. Well, if you're buying a $900 million house, you're not rebuilding it for $150 a square foot, correct?
Right.
Yeah. That gallon of paint that used to be $40 is now what, 100?
Mm-hmm.
Okay. So extrapolate that on a couple thousand square feet, and that's a lot of money.
Yeah. You're right. It's everything too. I just quick mention, people don't realize title insurance also continues to go up.
Mm-hmm. I did not know that. Why would that go up?
Because it's directly reflective of the value of the home, right?
It's a percentage?
Yeah, it's basically a calculated percentage. It's, again, title insurance is protecting the title to free and clear ownership of the home, meaning that once you own it, if anybody comes back and says, hey, I tripped and fell 2 years ago and I have a lawsuit against you, you owe me, because that would go with the house. This is protecting you, saying, well, the title of the home is now clear, so the insurance policy is going to pay that out. So
no mechanics liens or things like that on the house.
Right.
That's what that all does.
And the liens and everything, the payouts are all directly typically based on the value of the property. So as that goes up, then therefore so does the potential risk and payout. So therefore, like any insurance, so does the coverage and cost.
Yeah. So you don't sell only in Pennsylvania, you sell in Florida too, correct?
I would like to sell in Florida, but Florida is New Jersey for me. So Pennsylvania and New Jersey. Right.
So there's no reciprocity or?
No. So
let me ask you that, let me backtrack. Because you go to Florida a lot, right?
Yeah.
Okay. So what are the differences in the markets that you see down there versus here? Any similarities, differences, and then compare that to New Jersey?
Yeah, I would say that, like anything, there's pockets of every state that are more desirable than not, right? So there's pockets of Florida that are low cost and, low entry, extremely low taxes. Florida's taxes in general are low, and now they're pushing to try to have property taxes completely eliminated over time. That's the other thing people have to
I think
notice.
That's if you pay your mortgage off or something like that, right? One of those things.
It might be related to that. What I saw was it's over the lifetime of the property, so it's not something that's immediate. And they're still trying to figure out how would they make up the $300 billion in taxes they're not going to get from that. Well, the immediate thing that I thought of is, okay, well, if there's no property taxes, people are going to flock there. Well, supply and demand always rules, so the property values are going to go way up, and it's going to be unattainable anyway. So, but Florida, what's interesting is it's a much more of a volatile market than this area. So it's always going to be gorgeous. That's why I go there, why I vacation there. I love it. It's easy to get to. But you have a hurricane come through. Now, all of a sudden, insurance has gone up. This has gone up. That's gone up because we've got to recover from that. And the likes of your insurance company, Allstate and others, say, well, now here's one more likelihood of a major storm. This is a riskier area to have a home. Let's, in general, raise the cost to be able to insure these properties. Let's make sure that roofs are replaced every 5 years, 10 years, whatever it might be. So things that I think are much more sensitive to cost impacts and risk are present in Florida. But like anything, I mean, it's paradise. So no risk, no reward.
Right.
You also have a lot of those condominiums and things are getting to the point now where they need to be structurally reinforced.
Hurricane proof, yeah.
Yeah. So now to do that, that means all of the owners are getting hit with astronomical assessments. So I was looking at the Palm Beach Hotel, which dates back to like the 1920s. Gorgeous. It, was a hotel. Now they turned them each unit into a little condo, and a place, room the size of the room we're in is a 1-bedroom studio condo, and you have the pool. You can walk to the beach. It's, right down the street from the Breakers, Mar-a-Lago. They were selling for upwards of $900,000 each a few years ago. They're now not moving for sale for $250,000, $300,000.
Really?
Because they're getting $30,000, $50,000 assessments to each unit to reinforce and redo the building.
Interesting.
So, I first look, you're like, oh my gosh, and then I could Airbnb it, and this would be great. And then you start to dig in, and you're like, whoa, 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 whoa. There's a reason they're this low. So there's something that doesn't make sense, right? Gorgeous property, gorgeous location, great zip code, and the values are declining year over year.
So it's also homework. I mean, you're experienced, you know what you're doing. You can go to a different state, understand what the market conditions are, assessments, things like that. What are some of the, I guess, mistakes or assumptions that you see first-time home buyers make, whether it be Pennsylvania, Florida, New Jersey, wherever you're at? What are some of the things that you run into where they assume X and you're like, no, it's actually Y?
Yeah, the biggest one, and I just ran into that this weekend, is a home is listed for X. Therefore, I'm willing to maybe give them X. I guess it's worth that. What if it's not worth that? Can I back out? Whatever, not wanting to pay a penny over and being blown out of the water by 7 other offers that are $50,000 over asking, waived inspections, and they're like shell shocked. Like, then why did they list it at that price? This is ridiculous. This is bait and switch. That's the biggest thing with first-time home buyers. And I'll start out by explaining that price point, if that house is in a good area and in good shape, is just the baseline. That's just the starting point. And I'll get, blank stares of, okay. And then when we go to put the offer, very, trepidatious. Let's just, if it's meant to be, it's meant to be. And I have to explain to them later, no, this wasn't luck of the draw. This wasn't Jesus. We didn't play in a bidding war the way you have to play to win. So then I have to reset. Well, if you don't feel comfortable at that number, then unfortunately we got to start looking at properties lower than that, because again, if it's in good shape, you're going to have another bidding war. So
do you think a lot of first-time home buyers look at what they're approved for, go at that amount instead of, backing up a little bit and saying, hey, if you have a realtor like yourself who says, look, we can get in a bidding war, and we may need to, instead of our target being 8, maybe we should start at 6 and work from there. Is that something that you recommend now?
Yeah, for sure. I think that the ones that, and that's not all first-time home buyers, but I think it's the ones that have that shock and awe or challenge or stress, they're purely looking at what would be a nice house I'd love to own, and then going to the mortgage lender and finding out that they could qualify for that. And then they're going, like anyone would, I would do the same thing if I didn't know, and saying, okay, the max we can do and I'm comfortable with is 600,000. Dave, send us houses around 600,000. Then I send one at 600,000. It's the best one yet, and it's really going to go for 700. And then they're like, what happened? So then we have to, and I've seen, it is what it is. We kind of have to go through that before it sets in enough that they go, all right, let's start looking at 550. Because it just doesn't add up in the head. Well, if that's the price, why can't I have it?
So let me ask you this. I mean, it's obviously not a secret that it's been a bidding war out there. Mm-hmm. So when a first-time home buyer approaches you and let's say, hey, I got approval letter for 800, do you back them up and say, well, look, we're going to start at this number and here's why? Or how do you approach that situation?
Well, I first I'll dig into, okay, talk me through, what does that house look like? Move-in ready? Or are you thinking like something that could maybe need work? And if they go down the path of no, like I just move in ready, I just want to show up, blah, blah, blah.
Move my stuff in, unpack, and that's it.
Then I'll say, okay, so what if the property is listed at 800 and there's 10 offers, and you know, when you have a bidding war like that, you can expect that they're probably going to go upwards of 10 to 20% over, waiving inspections. How would you, just so I know strategically, how would you want to play that? Just as much as possible, get them into the fake scenario before it really happens. And the best thing to do is always to get them to say, let's look at things, versus me saying, all right, so we need to start at 750 because here's why.
Right.
They're going to buy into it more if you can get them to like, okay, so given all that and you're not willing to this, what do you think we should do? And then, right. Sometimes they'll either lower the price, but also with lowering the price, maybe say, well, let's check a different zip code, or let's start with a townhouse. Great.
So let's move to the seller side. Would you recommend, and again, on average, I know it's not a cookie cutter, every situation is different, but would you recommend typically someone saying, hey, I'm going to renovate my house before I sell it, or do I want to keep it as is? Is it worth spending the money to do that? So on and so forth.
I mean, I like when sellers say, hey, you know what? Can you just come give me a diagnosis? Let's take that approach. So then I come to the house and I come through and a lot of times they'll start with, what do you think the house is worth? Like, and you're coming in the door.
And that's when you're like, well, the green carpeting's got to go.
Yeah. I always say, look, I'd be nervous about any agent that comes in here and tells you what your home is worth. One, they're not an appraiser. Two, you haven't even shown them the house yet. So I go through my first meeting. I always say, I'm going to leave and you're not going to have a price from me. That's how this works. I'm going through, I'm taking my notes, I'm taking pictures, I'm taking it all in. I'm getting the vibe, the flow, the smell, the everything, the neighborhood. And then I'm going to pull comps, because now I've experienced the house. And in that discussion, as we're going around, I'm taking notes of what have you done recently? Things I wouldn't have seen. Oh, brand new HVAC. Okay, that adds value. Brand new roof. Okay. Or, hey, you know what? I'm outside looking and your siding's falling off. What's the game plan? Oh, do you think we should fix that? Well, are you looking for top dollar, or you just want a quick sell? Oh, definitely top. Okay, so let's make a list together of the things we should probably do, and from there, between looking at comps and comparing to current condition, and then telling them, and if you make these changes, here's what I think we can get. They'll tell me, screw it, put it on the market as is. I don't want to deal with it. Or, yeah, give me a month. I'm going to make those things. And by the way, who do you recommend to make those changes? My goal is to provide all the options. I mean, I have wholesale buyers ready to take it as is, with the furniture, with everything, with hoarder's nest, whatever I come across. That's an option. Or I can bring everything to the table to make it look like a brand new house. Whatever you want to do as the client, I feel my job is to give you all the options and then all the resources to make that happen.
Do you think sellers, because again, I mean, we weren't born yesterday. We've been around a while, especially me. We've seen that. I've seen this before.
Mm-hmm.
Do you think sellers may be getting a little spoiled and we may run into an economy soon, because there is a ton of construction going on out there? Mm-hmm. Like across the street from Shady Brook, that farm's completely developed.
Mm-hmm.
So is the other acres across the street from Shady Brook.
Mm-hmm.
So with all that supply coming on the market, do you think sellers may be a little spoiled now, and we may run into, in the next couple, 5-10 years, into a market where you may have to come down a little bit on the price, or you don't see that happening?
Well,
I mean, anything can happen, but
right.
You see where I'm getting at.
Yeah. I mean, all I can do is give my best opinion on the matter. I mean, there's markets that I would not have expected. I have a friend that's a realtor in Denver, and it's an extreme buyer's market, meaning you're just begging people to come see your house to buy it because there's so much inventory and nobody wants it.
Really?
So it's very specific to certain geographies. We're by and large in a very good insulated area when you start the
When you say good insulated, you mean the northeast pocket, that
You s-
95 corridor?
yeah, you start with the northeast part of the U.S., then you back down into our vicinity to Philadelphia, New York, to the shore, to so far we don't have any volcanoes. Hurricanes are light. So far, not too many tornadoes, uh, and earthquakes you can barely feel. You take the major things, right?
What about sinkholes? Just in
Yeah.
Florida, right?
Right. And Philadelphia. Um, for the most part, then you overlay other things. So you look at just in general um, quality of life, right? So not too extreme with temperatures. You've got all four seasons. You've got good schools. You've got arts and culture. Things that make a good place to live. We're benefiting from, and
Right.
so as long as we have that, we'll typically be on the better end of whatever's happening nationally. And so I'm not too worried, but then you go even more insular. They just yesterday I saw the post about Newtown named the best city to live in Bucks County, and everybody will have an opinion, whatever. But that means those that are not, right? It's a trickle down. So if we start to get pressure and we start to see a shift towards a buyer's market, it'll be first in those less desirable parts of Pennsylvania, less desirable parts of Bucks County. So the more you're in the desirable parts, the less as a seller you're going to be impacted because people still want to get here. I don't think, in my opinion, the changes that we're seeing, the development in the area in Newtown, a lot of it's apartments, a lot of it's 55 and over. I don't think it solves the demand, so I don't think that's going to be a negative impact. The negative will probably be traffic, but I don't think it's going to cause sellers locally to not be able to sell their home. And then the other thing is, what I can't predict is the macroeconomic things. If we truly, gas prices are up, this is up, that's up. If we start to go into a full-blown recession, then again, you're going to have people halting on making change in their life. They're going to continue to rent. They're not going to upgrade their home. They're not going to. So
or they'll take their house off the market.
Yeah.
Right.
So yeah, you'll have less homes on the market, hopefully. So you're not driving so much competition that you can't get your house sold. But those are the things that would, I think, make an impact. But again, by and large, I think we've seen in this area that it comes and goes. The original question you had was the our sellers getting spoiled, with what's going on, and if they are, it's just
them.
Well, and I mean, it's a tempering that we have to, as realtors, have to help them get through. But the reality is, a seller's market isn't normal.
Right.
A balanced market would be more normal. So we haven't even gotten to a balanced market, much less to worry about, oh my gosh, my house isn't going to sell. It's a buyer's market. So I think we're in a good place, and a little bit of less bidding wars might not be a bad thing.
Yeah. But it goes back to that, it's always been the seller thinks his house is worth more than it is, and the buyer thinks it's worth less than it is. And that's just the way it goes.
It's like buying a car.
Do you see anyone doing like a rent to purchase anymore, or anyone doing that? Like if someone owns a home that maybe, has a duplex in Philly, have you seen any lease to buy or rent to buy or option to buy? Do they do that anymore or no? Or you see that less and less frequently?
Yeah. I mean, I would say it's still a very unique, specific to the seller scenario. It's not super typical, especially in a market where it's still extremely valuable to be a landlord. So there's not usually you see that pop up more and become more prevalent when people are looking to unload the property, struggling to sell it maybe. So I don't see it very often. And a lot of times it's happening under the radar. Somebody's renting.
The private,
and they're saying to
landlord and the tenant,
hey, if instead of renewing next year, if you want to buy, and I'll hear about it because maybe they'll ask me to orchestrate the transaction, but you don't see a lot of them listed as that.
So to touch on that topic, I've noticed with your real estate agency, you do a little bit of everything. and I think you do something with estate planning or
State sale. Yeah.
estate sales. You can go into a little bit about that.
Yeah, sure. So I, opened my brokerage 4 years ago, Marcolla Realty. I've been in real estate a little over 8 years. And prior to that, I've always been in corporate marketing, Fortune 50 companies, all about the client, or customer experience, and revolutionizing that. That's what we were trying to market and how we tried to win. So I wanted to bring that into real estate and make it less transactional and make it more about solving problems. So a larger group of our client base is now boomers, and they're aging and they're starting to think about downsizing, maybe moving to a condo in New Hope or whatever it might be, or, God forbid, they're moving into a senior living or passing away. And I'm dealing with executors or family members saying, gosh, we have this big home and we have all this stuff in it. Where do we even begin? And so for me, that becomes, as a product marketer, okay, create the product, create the solution. So one of the biggest ones was there's not a lot of estate sale businesses out there that can come in and value the items in your home and generate, some revenue for you, for the belongings that are in the property. So we started a company called Turnkey Estate Sales, just to, hit on the fact this should be super simple. You don't need to worry about it. You just give us the keys. We'll take care of everything. And that's valuing the stuff in the home, getting it sold both online and in-person sale, and organizing donation and junk removal at the end. So we've had a few homes already that we've been able to, the executors in another state, they've never even had to come here. The estate attorney or the executor finds out about us, hires us, and we just take a percentage of the items that get sold. So there's no fees to the estate. Take care of everything. We'll bring in contractors if the estate wants us to fix the home up to get top dollar. We'll bring in professional organizers if it's just downsizing, organizing, stagers if we need staging. We get it sold and the estate gets a check and they didn't have to worry about anything.
So that's really great for a family who maybe have a boomer whose parent passed away. Now they have this empty house. They live in another state. They can't come back and forth, where what you'll do is you'll take care of everything for them.
Yeah.
I think that's a very unique service because not everyone's doing that.
Yeah.
Actually, I don't know anybody that's doing that.
Yeah, I'm sure there's some. I've dealt with quite a few estates where the executor is involved and we're just selling the house. And this is more so in the past, but it's until you've gone through it, and I haven't gone through it luckily, but I've witnessed it with these executors. It's a full-time job.
Yeah.
Because they're putting stuff on Marketplace, they're meeting people coming to pick stuff up, they're talking to this person, they're trying to find a painter, they're like, nobody can just stop their life because someone passed away and all of a sudden take on this full-time job of selling and preparing a property. So we want to solve that problem, and that's what I like about owning my own brokerage and what we're doing, is that there are no rules. We just need to find a problem, solve it, make people's lives better, and get paid in the end. That's a beautiful thing.
And when you recommend, let's say someone wants top dollar for their house. Let's say they've got the mauve carpeting from the 90s, the what is that? Paisley wallpaper. Remember all that stuff?
Uh-huh. That was my house growing up.
Mine too. That's what I said.
Everything was a shade of pink, I think.
Well, do you basically recommend, hey, like if someone wants to go overboard, do you kind of back them up a little bit? Or someone says, well, you know what, Dave, I'm looking to sell in maybe 5 to 10 years. I'm going to put in a pool versus doing my kitchen. Which would you recommend? Which builds more value? Because I see a lot of guys in my neighborhood, they're doing the man cave in the garage. I love it. But at the same point, I'm like, I'm losing that feature if I sell my house. Anybody can do that if they want. Right. So what do you recommend?
Well, I have a client that for that specific scenario, I think did the right thing. And he built a shed in the backyard and made that his man cave. So he didn't have to touch the garage. Right. So maybe that's the good answer. It's very different for everybody. And, I'll put that out there. I do have people that will, hey, we're not going to sell for 5 years, but, gosh, what do you charge to come out and tell us what we should start to do now to get ready? I'm not going to charge anything. I better be your realtor in 5 years, but, it's going to help. If I am going to be your realtor, this homework that I'm going to give you is just going to help me, right? Because realtors are paid a commission on a percentage of the sale price. So yes, I want top dollar too. So if you're willing to do it, I'm going to tell you all the things that are going to get us top dollar. And then also because it's in my nature to help people is be honest and say, no, I wouldn't. You go for it. Do the pool, but I wouldn't do it. But we have to look at specifically that home. We become, you probably heard this before from realtors, sometimes you're a psychologist, a life coach.
I've heard that. Yeah.
Yeah. Yep. And I'll say like, well, for the next 5 years, how much are you going to enjoy a pool? Oh my God, the kids would love, then do it.
But if the return is there, because that's really what I'm trying to drive home. A lot of like with ours, it looks good when you turn that key, but after when you get in, because our place was completely renovated and we were in a bidding war, I said, just pay the guy the interest rate 2.5%. I don't care what, right. Pay him more. But now we're finding all the things that are wrong. Mm-hmm. Right. So now we're running into, okay, I got to talk to Igor because I got to renovate this place in a couple of years.
Yeah.
But what I'm trying to get at is where do most sellers getting the most return?
Yeah. No, so it's the same thing.
Because pools are expensive, right?
Sure.
Expensive to run.
Yeah. The good news, so two things. One, nothing's changed. It's bathrooms and kitchens.
Okay.
That's always going to be the thing. But what you have to think about is imagine in your mind, you don't have to close your eyes, but just picture in your mind a house, right? Let's pretend this room we're in here is the living room. Let's say 5 years from now, you're going to sell this house and this is how the living room looks. It's not going to take too much to update it, right? You're talking paint for the most part. Kitchens and bathrooms, it's every little square inch. You can't paint a kitchen. You got cabinet choices, you got counter choices, you got lighting, you got appliances, you got blah, blah. Same with the bathroom. That's why we say kitchens and bathrooms, because unfortunately, styles change every 5 years or so.
Yeah.
You're not going to know when you did this living room. If you painted a basic white paint and it's in good shape, you may never have to touch it. So, but you could do, to your point, you could update the kitchen now, but you tell me you're not going to sell for 10 years. I don't care what you do in the kitchen because you're going to need to redo it in 10 years.
I was just thinking, right. I was going to ask you that same thing.
So, and we can do our best. And I'll also guide as well as what are the choices now that are most likely to not be an issue in 10 years, but we can't all predict style. The other thing is pools. We would have always said, you'll maybe get back 50%. I wouldn't worry about a pool because half the people are going to say it's dangerous. I don't need it. I won't use it. Post-COVID, it's become more desirable. So now it's more like 75%. So that's where I start to lean into, well, some people only make decisions based on the return and forget about living life. So I'll also coach them a little bit about like, if you're going to get 75% back, but you're going to enjoy 100% of your summer days for the next 5 to 10 years.
Worth it.
Yeah. But I love that. I'll come in and same thing. The other thing I'll look at is I'll show them comps in the neighborhood because that's how homes get valued. The closest similar homes. Well, what did they have? What did they have a pool? What did their kitchen look like? Because that's going to set expectations for buyers in the future that want to live in XYZ acres neighborhood. They're going to expect these things because that's what the similar homes have. So, yeah. And, the same thing with sellers. They're all across the board. I have one right now who said to me, he's out of the country. I want to sell my house. I don't want to miss this gap in the next month. I'm not currently living in the house because I'm out of the country for work. What can we do? And I said, well, if you want to go to the max of what we can do, let me tell you, because I can hire an inspector that will come in, inspect the home, give us a laundry list like inspectors do of a million things that we can or cannot do. And then I can hire someone to tackle those things. He said, money's no object. I want this house to be showroom ready. Let's go do it. So I had the inspection done, got the report back. Oh, we found some mold in the basement, typical of an older home that's nobody's in right now. Great. Mold removal guy's going out Monday. Take care of that. This needs to be done. That needs to be done. Fireplace is getting checked. A couple things are getting painted, and in a month we'll be on the market. But that's this client who says, I want top dollar.
Money's no object.
Money's no object. And I want people, he's smart. I want people to say, oh my God, it's been pre-inspected. You know what? Waive the inspections. Bidding war, bidding war, bidding war. And there's no extra cost. I don't charge anything to orchestrate these things because I want the house to sell for top dollar. So you can choose to go that route. You can choose to say, I don't want to know anything about the house because, I got to disclose it. So don't bring an inspector and you just walk in and tell me cosmetically, what would you do differently? Oh, okay, paint this, I'd do that, whatever. And send out my people if you need, and let's get it ready and go. And then I'm not doing a damn thing. Tell me what this house is worth and put the sign up tomorrow. You got it. The client's in charge,
That's funny. What else did I want to ask? What did we forget?
Commercial.
Oh, that's right. Yeah, that's right. So commercial properties, you do that as well, correct?
Yeah, and that's very unique. You'll probably not find many brokers who are a broker of a residential firm and also a commercial firm. So 4 years ago, I purchased Tucker Realty that we're now rebranding Marcolla Commercial, and they were located on Spring Garden Street in Philadelphia 50 some years ago. Been around a long time. Moved to Ben Salem maybe 10, 15 years ago. And I had the opportunity after the passing of the owner broker to take a look at it. We manage 65 commercial properties throughout Bucks County, multi-use, gyms, industrial, pharmacy, you name it. And we collect the rent. We take the phone calls when there's issues. We manage we manage the utility billing and get the master bill for the building and sort it out and assign it to the tenants based on square footage, collect that. It's full service property management and commercial brokerage. We've leveraged it to help someone buy and sell the Comwaters building here on State Street, the building next to the Wawa in Yardley. We've really started to grow out the commercial end of the business. And beyond trying to find problems and solve them for people, I also like to challenge, as you may know, the norm or beliefs. And again, coming into real estate, I learned right away, oh my gosh, you're either in this lane and you're a commercial real estate agent, or you're in this lane and you're a residential real estate agent.
Why not
And
be
you
in
can't,
both?
yeah, you can't possibly cross those two because, oh my God, this is like rocket science and heart surgery. Guess what? It's not. It's triple net versus paying your rent to your landlord for your apartment. You can know both, and you can get good at both. And I have someone that's my go-to, my lead on the commercial that just focuses there, and I have folks that are just residential. But I believe that 99% or more of business owners also own a home. So somehow they've figured out how to do both. I'd like to be their resource for whatever they need. So, I challenge, I don't think most, no, I shouldn't say most. I think there's some residential agents that should never be in commercial and vice versa. But I like the fact that I haven't come from 30 years of either. I'm new to it. I'm educated on both. I've done the training. I've understood it. And so again, I like the idea that gives us another opportunity to provide end-to-end solutions.
And you notice, I mean, at least what I've been noticing lately, a lot of your classical businesses, like even insurance, the brick and mortar is starting to go away. And a lot of these larger, non-industrial complexes, but larger commercial buildings are all being cut into pieces. And they're like, okay, we're going to turn this into a mixed use.
Mm-hmm.
The first, ground level floor is going to be all businesses. And then the next 5 tiers of it, or the next 5 floors, are going to be all residential.
Mm-hmm.
So do you see a bigger shift in that more and more, or what are you seeing on the commercial end of it? Because it seems like every time I pick up a newspaper or read something online in the real estate journals, you see nothing but these commercial properties that there are these old buildings that are, converting into high-end luxury apartments or condos. And then the first floor is all like what Worthington's doing in the back.
Yeah. And so what's interesting with Liberty Center, the project just referenced with that Jim's doing, is they're taking the mixed use plan that you just described and removing the commercial from the first floor and just making it all residential. So you do see in a lot of areas what you're describing. I agree. What I think is smart about his plan is also taking into account the unique challenges and demands and marketplace of Newtown, which is, I don't know if it's still the case, but I used to tout it a lot maybe 2 years ago that a woman could have something done to her body in 14 different places in 2 blocks on State Street.
So true.
But all that means is, my gosh, how much demand for those services are there, right? That there's that many all in business. Now we're seeing, restaurant spaces open, things not filling back up. And we've got, the Village at Newtown and other spots that are growing and bringing in, Capital Grill, other big names, other retailers. So the marketplace is shifting a little bit is where I'm going. And so now we need to be sensitive to making sure that we're not creating so much competition that these smaller businesses can't
Go out of
keep.
business.
Yeah. So the ask was, well, hey, we know there's no stopping the demand to be able to say you live in 18940. People want to be here. They want it. So what's the challenge? Well, the challenge we're hearing from the borough is they want more feet in their stores, not more competition. So if we can take those retailers out of the mix in this new construction and just bring in more feet by residential, then it's going to serve both. So I think it's, to your question, I think it's unique in the situation. You see Philadelphia, large buildings down there that, I worked at Comcast down there. And when I worked at Comcast, I was in offices in 7 different buildings, like buildings you didn't even know Comcast was a part of because there was so much demand. Now they built the second tower, and I happen to know a senior executive there that said to me, after COVID, they learned they were actually more productive with everyone working from home, but no one wants to admit they didn't really need that second tower. It took the force of having to use their own technology and work from home to realize that space isn't needed. But whether you want to admit it or not, that's happening. So to your point, now these buildings are open, but I think it's much more office space than industrial, where they're saying, oh my gosh, what's the owner of the building going to do? Because, Independence, Blue Cross, these other big businesses down there are downsizing. They don't need the space. So perfect, turn it into, residential luxury housing. Then your challenge, if you're talking about Philadelphia, is when you step outside of your luxury housing, is the living the what's the word I'm looking for that we said about Newtown? Does it have the arts, the culture, the demand, the weather, the schools,
the desirability?
Yeah. Is it a good lifestyle? So that's on the city of Philadelphia to figure out, but that's what will make that successful. And that's what's beautiful and what I like about when you watch. I look where I grew up in the coal region in Pennsylvania, and I have pictures, stories. My grandparents were there. It was booming. There's maps where Harrisburg, Pittsburgh, and Pottsville, Pennsylvania were the major cities, and it was because of the coal, right? Now the coal mines are all gone. It's desolate. There's a Walmart supercenter, and an aluminum factory where my dad worked night shift. But it's depressing. But I like, from a just history and understanding how things work, you have to do a good job of always being ahead of those things and knowing that, well, this coal is not going to be the thing forever. What's next? How are we going to bring in other aspects to make this a great place to live and work? And they didn't do that there. So it's important, in these areas like where we live, to have visionaries and developers that can say, well, maybe, what do you think about this? Because this could hit this problem and could do this. And so I would love to see many more. You have the whole industrial park out by the Newtown Athletic Club. There's a lot of office space always available. If the owners of those buildings and the township could agree to convert those into, look at Bed Bath & Beyond became a pickleball place.
Yeah.
We have to always be rethinking how to use space, because at the end of the day, you just don't want empty space. Who cares how it's classified?
Funny you mention that, because what is it? I think it's on Friends Road or Fountain Farm, the old, was it Bucks County school building? The weeds are growing out of the ground.
What, you're talking about LSAT, the Law School Admission Council? Looks like a spaceship, and there's all stuff growing up.
Yeah. That's it. That's it. Yeah. How long has that been vacant?
Well, that's going to be, if it goes through, that's going to be housing.
Oh, it is?
Yeah, Jim Worthington bought that too.
No. Good for him, man.
Yeah.
God bless him.
Yeah, I sometimes I think many people are jealous, but the reality is somebody's got to do it. It certainly isn't.
I mean, it's an eyesore.
It is, yeah.
Regardless of who does it, it's an eyesore.
Yeah. So again, that's what I think is important, is that there's rules and restrictions and laws around how space can be used, because every area has to have a master plan that looks out into the future and says, this is what we want our community to look like. Do we all agree? I'm a Catholic, but a big fan of Quakers, because they all sit down and they all agree. We don't move forward unless everybody agrees. Yeah. But you also have to say, nobody expected the housing crash. Nobody expected COVID. The world will change, not based on a master plan. And so you have to also be able to be flexible and say, all right, we didn't plan on this building ending up like this. What do we do? What's the best use case? What demand do we have? Should it be residential? Should it be, and be flexible to make those changes.
Do you think there'll ever be a comeback, like a revitalization in those coal towns? Like they tried it in Trenton or along the waterway. That didn't work out too well, but it worked in Asbury Park.
Mm-hmm.
You know, I mean, that used to be a complete dump.
Mm-hmm.
And then they started revitalizing, but bring on in nice restaurants, and then the buildings started. Is there a chance that maybe those towns, but do you think they're so far away and there's not enough money out there? You'll really get those investors to come in and say, hey, we can do X, Y, and Z because there's no commerce? Or what do you think?
Yeah, it's interesting to watch all that. And one, because again, I'm fascinated by how places evolve, and also because I'm from there and I still have family there that are like, why don't you come back and be the mayor? But there's a great example. There's the Miners National Bank, which was like the old, and like the symbol is the miners. And, my family, were my grandfather, great grandfather, were involved in mining. That's where they would have went to cash their check, and, covered in their coal dust. It has been closed for years, and now this couple came in and they've turned it into an high-end hotel and spa.
How's it doing?
Well, it's been a long project in the works, and I think it's just finally opening. And it's gorgeous because they've, you can picture these like probably 7-8 story lobby, like just back in the day when it was
in the 20s and 30s.
Yeah. And the huge vault and everything marble. And because again, this was built in the height of
the boom.
It's
kind of like Chicago, the way that used to be when the boom was there.
Yeah. So everybody's loving it because we want to have that time again in Pottsville. But I'm the one in the background going like, and who's coming to Pottsville for a getaway?
That's what I was just about to ask. How are they marketing that to get there? Like, right. So if you make it a destination,
right,
and you make it a place where there are landmarks to see or tourist attractions,
like you said, Asbury, like it's easy to do that. You have a beach. Yeah. What do you have there that, like when I have friends or family that are like, I want to see Pottsville because I'm curious. I'm like, all right, well, here's our itinerary. We're going to go to the Yingling Brewery Tour, and we're going to go back into the mountain, which is really cool because that's how they naturally keep the beer cold. And they'll show you where they walled off for Prohibition and hid all the beer so that the government wouldn't know there was still beer there and making beer. It's interesting. I don't know it's worth a 2.5 hour drive. You go a half hour north, you can see the burning town of Centralia, and you can see where all the houses are gone and there's still smoke coming from the ground.
So is that the town that was like...
They made it. It was a trash got caught on fire, and the whole thing
kept burning underneath, right? And the entire town evacuated. I heard about that.
Yeah,
is it really?
And but again, I grew up Pottsville, going to Bloomsburg because I went to college there. So my hour drive, I'd cut right through Centralia. So it's normal to me to see a burning town, and so all this stuff is like not. I wouldn't want to go, stay at a hotel to see that depressing stuff. But I don't know what else you would put out there as to why you would want to go there.
So other than, so conversely, take Asbury Park.
Mm-hmm.
Other than the Stone Pony, there really wasn't much there, right? So how did that get revitalized? But a place like, maybe because it's so far out, Asbury Park, the beach is right there. Maybe that's
the
what
beach.
It is.
You have the Springsteen. You have different connections that made it popular, and you're only an hour from millions of people. So
good point. Yeah, I think what you're saying.
Yeah, I think the only way you could maybe do it with Pottsville is you'd have to bring in like something else, a major concert venue, something that's going to cause people to have to go there. But I don't see the need for it. You're an hour from Reading, you're an hour from Allentown. Like that's where those things would happen first. So long-winded answer to you is sadly no. I doubt all of these revitalization attempts. I just think unfortunately the key components, the key ingredients to a bountiful society are missing.
Because you got to be close to that population.
I think so.
Unless like Hershey, right? Hershey is nothing but Hershey, but then you have the park.
Mm-hmm.
And then you have the hotels.
Let's say Yingling opened an amusement park. You know what I mean?
Yeah.
Unfortunately, it's like anything that has any potential, it's on their shoulders. Because I don't think you can just create something. You'd have to dig into something that is uniquely Pottsville, which again would probably be Yingling.
Good point. Dave, how can someone reach out to you?
Any way they want. They can come to my house. They can type a letter.
Well, if someone interested, what are they? Dave Marcolla Realty? How would they get in touch?
Yes. So marcollarealty.com or dave@marcollarealty.com email. Or just Google us, Marcolla Realty. We've got a great Google page, but I would love to hear from anybody that has any questions on real estate, residential, commercial, wants to become a landlord, wants to downsize, needs to sell their estate items, wants to join the Newtown Business Association as the president of that wonderful organization here in Newtown. I'd like to hear from anybody about anything.
Yeah, we'll put all your info in the links below. So
cool.
Thank you so much.
I appreciate it.